China's economy is reliant on too much debt and the enormous boom in credit risks leading to a new financial crisis. This, according to the International Monetary Fund. So what does this mean for the rest of us if China really does pop? Marc Ostwald of ADM Investments joins me now. So how worried should we be then?
Well, I think people have been warning on this for about 5 years. The IMF are a little bit late to the show. In fact, the warning that they issued last week, I think it was, seemed to be a little bit of, well, if it does happen, at least we told you so.
Great.
So I'm not necessarily going to take a lot of stock by what the IMF said. However, it is a point of concern. The rapid accumulation of debt in China over the past 5 to 10 years, particularly since the global financial crisis, is quite eye-watering. Now, there is a big difference here. I think one always has to, when one looks at the rapid accumulation of debt, one also has to look at the asset side of China's balance sheet, which is enormous. There isn't much government debt, so the government is always in a position, if it wants to bail companies out. Obviously, that's not a very satisfactory perspective from a capitalist perspective. From our standards, we don't like the idea that they just intervene whenever the going gets tough. However, I think the more important point is to actually have a look at the way things are changing at the moment, because in the period between 2011 and 2015, corporate profits in China barely rose at all, at the same time as there was a rapid accumulation of debt. This is starting to change now. Last year, corporate profits were up about 10.6%, and quite a lot of it retained. This year, they're projected to be up by something like 38%. So gradually, we are in a situation where there are a lot more bankruptcies going on, which is actually in a certain sense healthy because it's cleansing. And the amount of corporate profits, which can be used to pay down debt, are accumulating quite rapidly. So yes, it is a concern, and I'm sure there will be some casualties along the way. Will it be fatal? I doubt it very much. I think the other thing which one always has to remember with these situations is, where's the exposure? What the Chinese spent a lot of last year and the beginning of this year doing was trying to bring a lot of the debt which had been accumulated externally, a lot of dawdle debt, back onshore. And they've done that to a certain extent. That means that for the rest of us, actually, the shock is going to be a lot less, because the default, if it happens, is going to be a domestic default. Obviously, people would then be very, very concerned. Yeah, but that doesn't that mean if they start defaulting in a serial fashion that the Chinese economy will slow? To be very honest, probably you might see something in the region of about a 0.5% hit in terms of GDP. But we're not talking about something which is going to be a very rapid slowdown. So for the time being, I think it is definitely a point of concern. It means that one has to be quite wary in buying into Chinese equities and to Chinese debt. But overall, is the risk imminent? Probably not.
Okay. The point is, China's not immune, though, is it, to the rest of the global situation? I mean, the world is in debt, and the Western world is in mind-boggling debt, right?
Yes. I mean, we know now that the total debt in the world, this is government, corporate and private debt, amounts to 325% of GDP. It's sort of the elephant in the room that no one wants to talk about, because if, in all honesty, do we believe that we are going to grow ourselves out of that debt? It seems very, very unlikely, and China is definitely part of that.
Okay, we'll leave it there. Thank you very much indeed. That's Marc Ostwald there, talking to us about China's debt.